But so the moment you have El Salvador and just more and more countries, say there'll be a country in Europe, for example,
Right.
that accepts Bitcoin or other cryptocurrencies, Cardano, the idea is it would put a lot of pressure on the other. So there'll be like this kind of ripple effect
Right.
that and then the individual governments won't be able to help, and eventually there'll be a superpower like, I don't know, Russia or the United States and or, I don't know, Canada. So do you see that sort of an inevitable trend where cryptocurrency takes over the world as a store of value and as a method of payments?
Yeah, probably.
What up guys, Nakamoto Crypto here. Cardano ADA is set to go mainstream and become the third largest cryptocurrency by market cap, right behind Bitcoin and Ethereum. This is according to this portfolio strategist. Stay tuned, like and subscribe, let's get to it. So over the past few years, Cardano ADA has improved on its technological innovations, making it a strong competitor to Ethereum. According to a portfolio strategist at US financial services firm MorningStar, Amy Scott, Cardano could join Bitcoin and Ethereum to form the big three mainstream assets. During an interview, she stated that it is extremely difficult to determine a suitable price for many cryptos since they are not cash generating. However, assets like Ethereum have a built-in price to some extent. She explained that the Ethereum platform has several use cases. This is including the facilitation of decentralized finance transactions and the support for non-fungible token NFTs. That the fact that Ethereum is used as a utility should provide some sort of price floor, but she is not sure what that should be as of now, as a lot of people talk about a network effect where these currencies become more valuable as they are used more and they have more independencies and connections. According to Arnott, Cardano has a lot in common with Ethereum, as she mentions that Cardano's protocol boasts of promising technical applications that could lead in penetration into the mainstream. There is a lot of enthusiasm about Cardano and also about various stablecoins that are set to build on the Cardano network. Back in June, digital asset manager CoinShares disclosed that institutional investors are buying more proof-of-stake assets like Cardano and Polkadot compared to the proof-of-work coins and tokens. It was reported that Cardano attracted an inflow of $5.2 million, with Polkadot attracting an inflow of $3.8 million in just a week. And institutional investors have been buying Cardano and Polkadot on a weekly basis ever since. More institutional investors are now willing to invest in the leading digital assets. She believes that this growing crypto exposure amongst these institutions could see other assets also go mainstream. Regardless of the current trend of growing mainstream investors, she stated that the strong stance of the US Securities and Exchange Commission, the SEC, regarding Bitcoin exchange traded funds could pose a big challenge for other institutions to also get exposure on these digital assets. This was after she explained that it will be great news to have a diversified crypto index fund in this industry. Regulatory risk is a big issue that's been driving a factor behind a lot of the volatility over the past few months in this crypto space. So if governments around the world clamp down on crypto in general, or Bitcoin and Ethereum specifically, then that would be a large negative to these other cryptocurrency assets like Cardano, Polkadot and the rest of them. Over the past few months, the cryptocurrency market have struggled to regain momentum, losing half of its all-time high value. This came after China staged a crackdown on Bitcoin miners, and the likes of the UK, Japan, Singapore, the United States, etc. all imposed tougher cryptocurrency laws to control their operation. But the upside to this is that the market is slowly recovering. Bitcoin recently went right back up to $40,000 before retracement. Cardano's ADA exploded all the way up to $1.40. As Cardano prepares for a 60% price move, Cardano's fate could be determined by its ability to break out this $1 to $1.30 price range. Cardano's price is contained within two critical price points that will determine where ADA is gonna move next. On the upside, slicing through the $1.30 resistance, going as high as $2 if this happens. But on the downside, if the $1 support for Cardano's ADA fails, then investors may need to prepare for a 60% crash on the downside. Cardano remains dormant as of now, but as it edges closer to the apex of a consolidation pattern, the chances of an explosive price move increases. So high volatility is in the making. Most cryptocurrencies are enduring a consolidation period that will likely conclude in a substantial price movement. For Cardano, this ongoing stagnation phase could lead to a 59.5% breakout in either direction, either up or down. So such an ambiguous outlook is determined by the formation of a descending triangle on its daily chart. The technical pattern developed due to the price action that ADA has seen since it reached its all-time high of $2.47 back in mid-May is forming back once again. A series of lower highs created the triangle's hypotenuse while its axis forms around $1, where most of the swings from high to lows were capped. As of right now, Cardano must slice through the overheaded resistance at the $1.30 range or the underlying support of $1 to confirm the directions of its trend. Given the importance of these price points, investors should wait for a decisive candlestick above this area to avoid potential risks. So breaking through the supply barrier of $1.30 could see the fourth largest cryptocurrency by market cap head towards $2 per single ADA. But if sell orders pile up, leading to a breach on the downtrend below the $1 mark, then we could see a Cardano's downtrend to go down as low as 40 cents. Cardano's transaction history shows a similar outlook. Based on their IO map around the price model, the most significant concentration of underwater positions sits at $1.33. And at that point, roughly 275,000 ADA addresses have previously purchased more than 4.5 million ADA. These investors will likely try to break even in their long positions as the price keeps rising, making it difficult for Cardano to experience a bullish breakout. On the flip side, the IOMAP model reveals that the most crucial demand barrier below Cardano's price lies between the $0.07 to the $0.14. Approximately 102,000 Cardano addresses have bought 2.1 billion ADA around this price level. This is a significant number of addresses in which, in the event of a downswing that pushes Cardano below these price points, such market conditions would likely increase the chances of these investors to exit their positions at the market value, pushing the price of Cardano's ADA further down. The IOMAP shows that if this happens, a 36 cents ADA would likely occur, as the price will consolidate for a very long time before coming back up to that dollar level. Cardano is also preparing for a web mobile integrations. With JavaScript support, Cardano enables Plutus applications in their browser. Charles Hoskinson recently revealed that Cardano's smart contracts are now compatible with the web browser on testnets. In a Tuesday video stream, the Cardano founder, Charles Hoskinson, said that the team was now successful in running the Plutus application backend in JavaScript, the most widely used programming language on the web, as the application backend is now running in JavaScript. Cardano's smart contracts are now compatible with web browsers on the testnet, describing this update as a major development. So despite recent volatilities in prices, the Cardano team is still working hard to publish these smart contracts. Some expect this to happen around September. So leading up to September, we may see Cardano's ADA rise on the upside. What are your thoughts on this? Let us know in the comment section below. Like the video, share, subscribe for some daily crypto content. I have been Mr. Nakamoto Crypto, and I'm out.